What is the question that I get asked the most? It's simple. What are interest rates going to do for the rest of 2024? Well, I don't have a crystal ball, and if I did, I would probably use it to look at something other than interest rates. But let me use my crystal ball and tell you what I think they're going to do. Before I do that, let me tell you why you care what I think about interest rates. Because I've been doing this job for 22 years, and my father was doing it for 14 years before me. So we have seen a lot of interest rates over that period of time. We also understand the markets, and we understand how the markets affect interest rates. It's very important that if you want to guess or predict what mortgage rates are going to do, that you understand our bigger economy, because interest rates are a direct factor of what is happening in our larger economy. As I record this, it's July, and we have a presidential election in about 4 months. Presidential elections almost always impact mortgage rates. They shouldn't. We don't want them to, but the simple fact of the matter is the markets are going to be affected by who wins, and therefore mortgage rates are going to be affected by who wins. So as I sit here, there literally was just an attempt on former President Trump's life. Someone took a shot at him, he survived, but that had a massive impact in the markets. If you haven't checked that out, it literally happened the Monday after he was shot at. So we see markets move from a variety of things, but definitely things that happen in presidential elections tend to affect those interest rates. Many people now think that Trump, and the polls tell us that it is likely, more likely than not, that Trump will win this election. And I'm not telling you where I stand politically, I'm just telling you that these things matter from a monetary standpoint, because Wall Street is going to act differently with a conservative Republican than they are with a liberal Democrat. Could be better, could be worse, we don't necessarily know, we just know they're going to react differently. A lot of it is about what their policies are and what the politicians, or what the markets are expecting the politicians to do with those policies. Most people that are in Wall Street saw a lot of prosperity under former President Donald Trump's 4-year period of being our president. And so they think that if he's reelected, we will see a return to that level of prosperity. Other people think that we've had that level of prosperity for the last 4 years under Biden, and they don't think there will be a change. So regardless of which you believe, those thoughts, your personal thoughts, are going to affect how you manage your money. Do you want to be more aggressive and put it in stocks that you think will grow? Do you want to be less aggressive and pull it out and put it in bonds that are more secure? And bonds are the vehicles that back up mortgages. U.S. Treasuries and mortgage-backed securities back up mortgages. So when we talk about what a rate's going to do, we have to talk about what impacts rates. So really, that's what we're looking at when it comes to forecasting the future. Now, what you're asking me is, what do I think mortgage rates are going to do? Since we saw rates initially climb, we have thought they were going to come back down. There are several reasons that interest rates got as high as 8% on 30-year mortgages. But all those factors point to the fact that they would come back down. And they actually have already started coming back down, because we have hit a high of 8%. And as we sit here today, we're in the mid-6s. So we believe as an industry that things will continue to trend in the downward direction. Now you hear people say the Fed cutting rates. The Federal Reserve, or the Fed, does not control mortgage rates specifically. They control what's called the Fed funds rate. And the Fed funds rate is the rate at which banks lend money to each other or borrow it from the Fed overnight. And the Fed controls that basically to control the lending of money. Mortgage rates are a little bit different. The Fed's rates can move up while mortgage rates move down, or vice versa, but in general, they tend to follow each other. So we do expect that when the Fed cuts rates, which they've talked about doing, that mortgage rates will come down again as well. It's important to note, originally the Fed was hoping to lower rates at the beginning of this year. And because inflationary data has stayed high, they've put that off and put that off and put that off. Many now think that fourth quarter will be the first time this year that we see the Fed lower the Fed funds rate. So, to wrap all this up with a bow, if you're wondering what I think as far as mortgage rates over the next 6 months of 2024, I think we will continue to see interest rates drop with small spikes back up as news affects us and maybe surprises us. But as a general rule, I think all the way through the election and into 2025, we will see mortgage rates continue to trend downward. Now, you might be saying, okay, Michael, then should I wait to purchase a home till rates get lower? I would strongly encourage you not to do this. There's a very simple reason why. There are a lot of people doing just that. And when rates get back down, let's say below 6% into the fives, all those people are going to jump back into the housing search, and you're going to have all this competition to buy a house. There's already low inventory, and we expect it to continue to tighten a lot once the rates come back down. So if you're thinking about buying a house, even if the rates are currently, let's just say 6.75%, you'd be better off to purchase that home at today's prices when the home is available and there's less competition, and then a year from now refinance to a lower rate than you would if you wait a year till the rates drop, but now you have all this competition and prices are being driven up through that competition. So even though we expect rates to come down, I would strongly discourage you from waiting for lower rates in order to purchase the home if you know you're going to buy anyhow. Purchase the home, and at Weber Mortgage, when we refinance your loan to the lower rate, we're going to not charge you another lender fee because we want to treat you right. So if you have any questions about what mortgage rates are going to do, where they currently stand, or a specific rate quote for you, I would love to be the person to walk you through that. Just call Weber Mortgage today and we'll give you all the information.